Hello and welcome. This is from the CBN. We bring to you weekly reports and expert analysis of the actions, policies, events, and economic initiatives of the Central Bank of Nigeria, CBN. I'm Misi Dada. The Central Bank of Nigeria has over the years put in place several measures to mitigate risks in the financial system. From the introduction of the automated teller machines ATM operations in 2002 to the Global Standing Instruction GSI of 2020, the Apex Bank has done a lot to de-risk the system. Last week, the CBN brought together risk managers in the country for its second National Risk Management Conference. We have that for you in today's package, plus expert analysis of the tight monetary policy stance of the bank at its last MPC meeting against the recent economic developments. Stay tuned. We'll be back after this break.
If someone calls or sends you a message that you have payment issues with your bank and requests that you reveal sensitive information, end the call and don't click. It might just be a scam. No bank will ever ask you for your personal identification number, PIN, mobile banking password, or your card verification code, CVC. Scammers always sound genuine, but don't fall for their bait. Don't respond to phony emails or SMS, and don't click on any dubious links. Even if the other party calls your date of birth or your BVN, don't give them your security details. If you suspect there's an issue with your account, the safest thing to do is go to your bank or call the number provided by your bank directly. Protect your bank details so no one steals your money. This message is from the Central Bank of Nigeria, CBN.
Welcome back. The Risk Management Department of the Central Bank of Nigeria, in conjunction with the Chief Risk Officers Forum, last Thursday 27th and Friday 28th October, provided an opportunity for risk managers across the financial system and across the country to gather together and deliberate on risk management in the promotion of financial system development for economic growth. The two-day conference, which held in Lekki, Lagos State, focused on the link between financial system development and economic growth and how sector-wide risk management can foster financial system development. The conference also aimed to identify and proffer solutions to existing and emerging risks that have impeded the development of the Apex Bank. Addressing the participants, the Director, CBN Risk Management Department, and the Chairman, Chief Risk Officers Forum, Dr. Blaise Ijebo, said the time has come for risk managers to be more creative and go beyond telling organizations what cannot be done to telling them what can be done to achieve set goals and objectives.
And one key area we can help is to begin to come up with ideas how we can grow the financial system in a way that is sustainable, is low risk, and achieves its objectives. The objective of the financial system is usually to reach more people, to create more financial inclusion, create more credit so that organizations and companies can grow and become large corporates and the economy can grow. The central bank has done a lot. In the last 10 years, it has been involved in multiple initiatives to reduce risk of lending, to increase financial inclusion, to also extend the growth of different industries. If I start from the BVN, many people wonder why do we go into BVN. The whole idea is that if you have a unique identifier for the banking system, it becomes easier for banks to lend to retail customers. And that has seen a shift in lending to retail customers over the years.
In her paper presentation on risk management in the promotion of financial system development for economic growth, Director, MPL Advisors, Mrs. Remi Odunlami, said the financial system globally has undergone a series of changes and development over the last 4 decades, creating great opportunities but also raising financial and reputational risks.
Over the 20 years since the 2005 consolidation, we've moved very significantly into digital kind of banking. We've got a lot of electronic banking. In fact, I think very few of us have issued a check in the last 2 years. Everything's done by transfer. But that brings into play operational risks. it brings into play the technology risks that we as risk managers need to keep an eye on, and the regulator who sees the whole picture really needs to get a handle on. So we do see different regulations coming through which speak to each of those risks. And these are the underpinnings of the financial system, and they're the things that basically grow and they support the financial system development. And financial system development, as we've heard earlier, is intrinsic to economic growth. There was, in 2002, the commencement of ATM operations, and then significantly for me, in 2004, the introduction of the BVN. As a lender, the BVN was critical. Prior to that, we had people with variations of the same name crisscrossing the system and basically borrowing here, borrowing there, and when you wanted to call in your loan, he walked off on you, you had a bad loan, he opened an account somewhere else. The introduction of the BVN in 2004 made that very much more difficult for all of them. Another thing that we needed to deal with was in the check system, and that was truncated. Well, when the central bank introduced the check truncation model in 2012, they took out the kiting that we used to deal with. We used to have people who would, because then, if you paid a check in Kano, it took 7 days to get value in Lagos. We had people who would borrow against the check that they've deposited in Kano with the idea that we'd get value in Lagos. By the time the check cleared and was returned, he had gone and the money was gone. So the check truncation model that was introduced in 2012, which reduced significantly the timing that it took to clear checks, meant that the level of kiting was reduced. In fact, I think kiting died away, and it's probably a word that many people don't even know any longer. But these are steps that the central bank has taken to reduce some of the risks that we were dealing with. Similarly, the global standing instruction, which was introduced in 2020, has tied in with the BVN and has tied everybody into their loans across the system. I cannot have 100 million naira in Sterling Bank and borrow from UBA, our customer, who we know is the same person because of his BVN, has an outstanding loan over here. You've got the money, can you send me the money? Let's clear it out. That has also worked to reduce the level of NPLs in the system, because the NPL rate was a major risk for the banking system, and it's one that we do need to keep well under control. It varies from bank to bank. The central bank has set a working limit of 5%, and right now, as an industry, we're below that figure. But that is also assisted by the fact that people know that they can no longer borrow and still hold their money in reserve.
Mrs. Adulami commended the efforts of the CBN in moving resources towards economic growth through its development finance activities and interventions, as the rail and agricultural sectors, which are critical to the economy in time past, were not getting the required attention on account of inherent risks.
Other things that they've done, the RT200 non-oil exports proceeds repatriation scheme and the establishment of a national collateral registry are all areas that they've used to try to bring out and to support the industry. I think we do need to give credit to the Risk Management Department of the Central Bank and the Central Bank and the regulators as a whole for the efforts that they have made to assist us as risk managers in dealing with the various risks that we see. As far as risk management goes, we've had an interesting journey. We started off back in the day with no clear way of identifying risks. We knew there were risks. I mean, banking is a risk business. But what was the risk? The only risk we really identified was credit risk. We knew that there's a risk when you lend somebody money that he will not pay back. But over the years, we have come to understand that we've got credit risk, we've got operational risk, we've got information security risk, we've got legal risk, we've got strategic risk, we've got risks upon risks upon risks. We've cut and diced them, and we've come back to enterprise risk. But we've come through from just a kind of vague understanding of risk to some sort of uncoordinated assessment of risks and silo reporting, because we've got about, depending on which organization you're in, we've got between 6 and 15 risk buckets, probably reporting into different places and being treated in silos. Then we moved to harnessing all of these risks in one person within the organization, the chief risk officer, who, generally speaking, is a jack of all trades and, shall we say, master of none. But anyhow, and we now decided to get together as risk officers, and the CRO forum was set up so that the experiences could be shared, and by that mitigated, because it does help if somebody else has done something and you hear about it before you experience it.
The MPL Advisors Director noted that presently the economic environment is characterized by exchange rate weakness, persisting insecurity, debt sustainability concerns, inflationary and fiscal pressures, which risk managers in the financial system must navigate in order to collaboratively deal with risks in a constantly changing digital world.
When you run a business in Nigeria, cash collection can be such a big deal. At first, it was just you and the product. And then you have a shop, then 10 more shops, in 10 different locations, in 5 different towns. Wow, that's 50 cash points. And 50 cash points could need 150 different cashiers to manage. Now, that's a big business. With bigger cash collection demands, that's where we come in. Introducing eNaira Web Wallet. It makes managing cash collection as easy as ABC. Yes, 3 simple steps. We help you with 1. Setup, 2. Onboarding, and 3. Start your cash collection. With all your cashiers on point, all your customers have to do is this. Walk up to a cash point, scan the QR code, the amount, and bam! Your money is here just like that. We provide 24/7 support for any issues that may arise. We're just a phone call away, or you can also email us. No matter how much the business grows, we're here to grow with you and help you collect more cash every step of the way.
eNaira. Same Naira, more possibilities.
Thanks for staying tuned. You're watching From the CBN, a weekly program that brings to you reports and expert analysis of the actions, policies, events, and economic initiatives of the Central Bank of Nigeria, CBN. At its September meeting, the CBN Monetary Policy Committee was of the view that, given the primacy of the bank's price and monetary stability mandate, it was expedient that significant focus must be on taming inflation. With headline inflation in September standing at 20.77%, should the MPC maintain its tight policy stance or not? I held a talk earlier with the chairman, Chartered Institute of Bankers of Nigeria, CIBN, Abuja branch, Professor Uche Uwaleke, on this and other economic matters. Professor Uche Uwaleke, thank you very much for joining us on the program today.
Thank you so much. I'm glad to be with you.
All right. So let's begin by looking at the recent figures released by the National Bureau of Statistics, putting inflation at 20.77%. Let me quickly quote what IMF says about inflation in its October outlook. It says, Inflation often comes down to how people expect prices to rise in the future. We find that the more backward looking people's expectations are, the higher interest rates have to rise. Does this inflation expectation, does it apply to Nigeria? What do you think?
Yes, I think it does. The inflationary pressure is partly the product of people's expectation. That's why you find people going out to demand something that they don't need now, but something they would want to keep in anticipation of a higher inflation rate. Take the case of Forex, for example, foreign exchange. The demand for foreign exchange today, much of it is not really backed by the need to use it for an immediate need. Some of it is simply speculative. So people are demanding forex as a store of value, and that is further, fueling inflation rate because, of course, it's also increasing the exchange rate. So when exchange rate increases, particularly in the parallel markets, where you find a lot of retail activity going on, of course, it fits into the inflation rate figure.
Let me move further on what the IMF says on that. It says for monetary policy makers, understanding the expectations process is critical. When expectations are more backward looking, monetary policy tightening, including through clear communications by the central bank, should be stronger and more front loaded in response to an inflation shock. This aligns, just as you said, with the tightening policy stance of the CBN. So, what expectation should we have in November when the Monetary Policy Committee will meet again, seeing that inflation has risen to 20.77% in September? And if the monetary policy chooses to tighten further, can you tell us what the implications will be on the economy?
Yeah, first let me start by saying that I read the press briefing by the World Bank at the just concluded IMF and World Bank annual meetings. I read it, and my first impression about it is that some of the recommendations there may not apply to developing countries like Nigeria, frontier and emerging economies. They have made sweeping recommendations, but of course we know it's not usually one cap, size fits all situation. By asking central banks to tighten monetary policy, of course that can work in developed economies where inflation rate is primarily driven by monetary factors. So if inflation rate is driven by monetary factors, where you have high money supply, of course tightening monetary policy would make sense because that will go to reduce the money supply and by extension reduce inflation. But I don't think that recommendation by the IMF and the World Bank will suit the case of Nigeria, and that's because the major factors that drive inflation rate in Nigeria are not monetary. That fact that has been established. Even the central bank acknowledges that because what is driving inflation in Nigeria today majorly are structural factors, they are supply side factors, they are cost push related, if you like. You have high cost of fuel because you have been importing fuel. You have high cost of electricity. Okay, you have high cost of transport. So all these feed into the cost of production, and then you now have, of course, rising inflation rates. In Nigeria today, we are witnesses to the flooding that has taken place. So climate change is also a factor, and perhaps more importantly, a major factor that is driving inflation rate today is insecurity. I'm sure you know, Olu, that the food inflation is where the pressure is. If you look at the data by the National Bureau of Statistics, inflation rate is 20.77%. That's headline inflation. That's the average. But the food component of that is over 23%. Okay, and if you look at the figure they also released by states, you find that inflation rate, food inflation rate in places like Kwara is as high as 33%. That's where you have the state with the highest food inflation rate. So, and people will argue, and I tend to agree with them, that even this data are not, do not represent the reality. That in reality, the numbers are higher. Okay, so the major factors driving inflation, okay, as I said earlier on, are not monetary. And because of that, even if you tighten monetary policy today and you still have insecurity and you still have high cost of fuel, unfortunately, because we keep importing fuel. So if international crude oil price is rising, we are suffering it. So if you tighten monetary policy where you have inadequate power supply, high cost of energy, you still have inflation. Okay, so the solution to Nigeria's inflation rate today is not something the central bank alone can do. It's about also the fiscal authorities, joining hands with the central bank to fight inflation. Yes, inflation is about the primary mandate of the central bank, maintaining price stability. That's why you find the central bank, worried about inflation more than even about, economic, growth or output or unemployment. So for them, their tough is inflation. And that's why you find the central bank increasing monetary policy rate. Now, to answer your question, Jure, by November, when the MPC meets for the last time this year, the MPC may likely also increase the monetary policy rate because of the rising inflation. And maybe in response to the advice by the IMF is advising central banks to stay on course with respect to their mandate. Their primary mandate is inflation. And according to the IMF, they should further tighten monetary policy. So that is what may shape the response by the central bank MPC in November. But if I were a member of the MPC, I wouldn't vote for another rate hike. Because if they keep increasing rates each time they meet, that will signal panic. It will tell the markets that central bank is on a panic mode. And once the markets get the feeling that the central bank is on a panic mode, whatever the central bank does, will be countered by the behavior of the market.
The proposed budget for 2023 is 20.15 trillion naira. 6.31 trillion naira of that amount is for debt servicing, and the federal government plans to borrow even more to fund the budget. As a banker to the federal government, what should be the part of the CBN in all of this, bearing in mind that its ways and means have been overly criticized?
Yeah, thank you very much. You can see the difficulty that we are in, a situation in which you have a budget deficit of over 10 trillion naira. The budget deficit is to the tune of 10.7 trillion naira, okay, out of which the government intends to borrow fresh 8.8 trillion. So that in itself is expansionary. That in itself is, will also help to fuel inflation. How? Because much of that money is not going to capital. If you look at that budget, out of 20.1 trillion, okay, over 14 trillion is going to be spent on recurrent, because you have 8.3 non-debt recurrent, and then you have 6.3 trillion as debt service. So 6.3 plus 8.3 will give you over 14 trillion. So it's only 5.4 or so that is for capital. Now, because the bulk of it is for recurrent, it will further fuel inflation. Okay, so the role of the central bank, in all this is, of course, to reduce the ways and means that it has been resorting to. Yes, we understand the central bank is banker to the government. The central bank is lender of last resort. Okay, but it should, given the volume of the ways and means now, at nearly, some estimates say 20 trillion naira. Okay, the central bank, of course, scale down on those kinds of financing.
All right. Professor Uche Waleke, we thank you for your insights. Many thanks.
Thank you very much. It was my pleasure.
That will be all for this week. Report on resolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN contact center on the phone line +234 700 2255 226. Local call rates may apply. For inquiries and comments, use the email address fromthecbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I'm William Misidada. Stay safe. Bye for now.